Hello everybody, this is Toni Turner and welcome to the market now as of about 11 a.m. Eastern on Friday, December 23rd. Before we start, please know that I wish you and your loved ones a very Merry Christmas, Happy Hanukkah, and wonderful holiday season. And now on to the market. U.S. stocks opened little changed in light trading today as investors gear up for the Christmas holidays. Trading volumes have been muted this week, which is also the last full week of trading this year. U.S. markets will be closed for the Christmas holiday this coming Monday. U.S. stocks fell on Thursday, weighed down by weaknesses in retailers. The decline pulled the Dow Jones Industrial Average further away from the 20,000 mark after it came very close to breaching this historic level last week. Following a sharp rally since the November 8th U.S. election, the Dow is up about 14% for the year. The S&P 500 is up 11% higher on bets the economy will benefit from President-elect Trump's plans for deregulation and infrastructure spending. Now let's look at three charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at a daily chart of the S&P 500 Spider, symbol SPY. As you all know, this is the ETF that closely tracks our S&P 500 index. As you can see today, when I captured this chart, the SPY is trading at $225.44. This is about $22.54 on the S&P 500 itself. We know that the SPY made an all-time closing high with the S&P 500 index of $228.34 on December 13th. This would be about $22.83 on the S&P 500 itself. Now, as you know, the SPY, the S&P, has been making a series of new all-time highs throughout November and into December, and we've had a fantastic Santa rally. We certainly can't complain this year. We got no coal in our stocking. Since that December 15th or 13th high, however, the S&P has pulled back a little bit. That's totally normal. As we know, it is trading above the red line on this screen, the 20-day moving average, certainly at a premium to its 50-day moving average and a premium to its 200-day moving average. We can see the RSI moved up into overbought territory and now has pulled back following price. The MACD, the black line, has moved just below the signal line here, as you can see where it's plotted over volume. Volume has been low in the last week, as is normally the case. So the question here is, here's the big question. Will the SPY continue this uptrend? That is what we want to see here. Can the S&P 500 maintain this momentum, at least to continue in an uptrend? And an uptrend on a price chart, whether it's daily, weekly, monthly, or even seasonally, is a series of higher highs and higher lows. Higher highs and higher lows. And that's what we're asking of the SPY here. Now that you've broken out, can you continue in this uptrend? Can you move up over, say, $229 and continue this momentum? Or is some profit taking because of the big rush up, the big run up? Is profit taking going to come into this? If so, we would hope that the SPY stays above 222, this support line here, and certainly above 220. The S&P 50-day moving average, is coming up here. We often watch that for intermediate term support. So at any rate, we do want the S&P not to go below this little low here again, and certainly not down to 208 or 2080. But can it continue here, making higher lows and higher highs? Of course, that will be very bullish. We know that November, December, and January are the three most profitable months of the year for the bulls, and it would be very nice, of course, if this momentum could move into January. But that is something we are going to have to see. We are pretty sure that if the S&P 500 does begin to pull back on profit taking a little bit or on headline risk, that certainly many of our stocks will pull back with it as well. So let's continue to watch it and see if it can at least maintain an uptrend here. Our next chart today is the PowerShares QQQ, symbol QQQ. Of course, this is the top the top 100 stocks by market capitalization in the NASDAQ stock market. That's what this ETF represents. The QQQ has in it the big guys, Amazon, Google, Microsoft, which has been doing very well lately, Intel, Netflix, Facebook, Apple. All of these big momentum stocks are what move the QQQ higher the majority of the time. Now we can see that the Qs have had resistance. They came up and made an all-time high on December 15th of $121.11. Whoops, got my cursor right here. $121.11. Now, however, the Qs are sitting on this support line of $119.50 that was put in place in November and October. What was once resistance is currently support. When I captured this chart, the Qs were trading at $120.07. Interestingly enough, the Qs are back at the highs, the all-time highs that they touched in March of 2000. So 16 years later, it made it all the way back to that prior high. Okay, so question is, can the Qs maintain this new high that they have etched on this chart? Can the Qs continue in an uptrend, or will the Qs have to, and the big tech stocks, fall back into this prior base? We have a higher lows here going on, a triangle formation going on. We could call it a wedge. Can the Qs can continue higher here, or will they give up for at least a little while? Please know that the strengthening of the U.S. dollar is not a big help to these big technology companies, because they are most of them sell their goods and services overseas, and a higher dollar makes those services more and products more expensive. All right, now let's look at our final chart for the day. It is a chart of something we haven't looked at for a long time. This is the Select Sector Spider Healthcare ETF, symbol XLV. This is a daily chart. Would you know that healthcare is this year's worst performing group? They've had quite a time ever since Secretary Clinton started making comments about the price of pharmaceuticals. Then, of course, that was not helped. I believe President-elect Trump also made a couple of comments about it. That has taken this particular ETF from lows down here in November of about $66. Then it shot up on the election, then fell again down to lows here just below $67. Went up to highs of 72, I should have said. But it is making higher lows here. One thing we know is that all of the people in the U.S. and certainly the globe are going to need health care in the future. And some wonderful advances are being made in this sector. So I'm keeping an eye on it. I like to get a little contrarian sometimes, and as the sector that's been the most beaten up this year, I'm interested in watching the XLV. Now, the XLV is naturally diversified. It's not just pharmas or just biotechs. The XLV includes components that are pharmaceuticals, biotech, medical equipment, and healthcare providers. So all of these different industry groups give this sector a pretty good diversification. That's why I want to watch it here. Top components are Johnson & Johnson, Pfizer, Merck, United Health Group, Amgen, Medtronic, companies like that. So it is making a triangle here on this chart. As you can see, Volume's been low lately. That's normal. The MACD is trading right at its 0 point, leaving it some room for upside. The RSI is making a slight uptrend recently. The XLV has made higher lows since this move down to 66 in November. Higher lows are always a good thing to see. Now we're kind of an inflection point here, and I'm going to watch the XLV. It is trading today above the green line, the 50-day moving average. That's important. I want to see, it was at $69.31 when I captured it. Can the XLV remain above the 50-day moving average? Can it move above this trend line at about 69? We'll call it 69.50 or 69.75. Can it move above this trend line? And can it move above this prior little high here that it made? And if you want to translate all that, I'll translate it into, I will be bullish on the XLV if it can move above and stay above the $70 mark. If it can do that, I may take on a small position. Then if it can move up and over the 200-day moving average above 71, I may take on another, add to that position that I just mentioned. So I will be bullish on the XLV as long as it stays above. My line in the sand is the 50-day moving average here. If it goes below that, I am no longer interested in it. So you may want to keep an eye on the XLV, see if it can make some progress in upcoming weeks. And now on to next week's economic reports. But first, please join us on Tuesday, December 27th, for our next session of Toni's Market Club. We usually meet on Mondays, but because of the Christmas holiday, we will meet on Tuesday of this coming week. We will talk about which side of the market to trade, have a mini trading lesson, and I will give you stocks and ETF ideas that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to everyone a few minutes after the session ends. And now for the coming week's economic reports. On Monday, the market is closed for the Christmas holiday. Tuesday, we have the Case-Shiller Real Estate Index and Consumer Confidence. Wednesday, we have pending home sales and our usual crude inventories. Thursday, we have our usual jobless claims and natural gas inventories. And Friday, we have the Chicago PMI. Again, please join us for Toni's Market Club this coming Tuesday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, I wish you a Merry Christmas, Happy Hanukkah, and wonderful holiday season. I'm Toni Turner, and this is The Market Now.